What's up, guys? Monetary Recap, back at it again with another video. And today I first want to introduce everyone to the Discord that we've been mentioning. We've been currently developing it, so currently we just have some bots that currently put out some of the callouts that we have been posting, that we've been talking about. So these are some of the paid bots that we have that, you know, if you join our Discord, are free to use. We will have more high quality bots as time progresses, and as we get into the more premium stages of our Discord, we will have one-on-one consulting. You'll be able to talk to six-figure traders who, you know, are making consistent gains each day and ask them questions, and we will have pre-market, you know, discussions and briefings, and we'll use some of the DD that our analysts gather each day before the market open, and we can compare and, you know, really give you guys an edge. So this is our Discord channel. We're going to link it in the description if you guys want to come check it out, and you know, make sure you join and send an invite to your friends. So really, we're going to get into the meat of the bones today, and that is Hex. And so there was a very important tweet that went out that everyone should check their pulse balances and to make sure that they were correct. And, you know, that was leading a lot of people to believe that maybe the snapshot was going to happen the night of. And now, see, someone who's been in Hex for a while, I know that that's not the case. I know that these things are, if there's a upwards reaction to news, we're most likely going to see a sell-off. If there's a negative reaction to the news, we will most likely see a bounce afterwards. It's that reverse logic that we've been talking about. And so some of the key levels here that we're going to take a look on is we're going to use Fibonacci retracement as our favorite friend. We're going to start at 52 cents, and we're going to use 10 cents as our bottom. And we can really see that we've been hovering in this red area since February, which has been over 2 months now. So this is a sustained correction in Hex. This is the longest Hex has ever been down from its all-time high for almost 216 days, so almost a year actually. So yeah, I mean, this is prime. You know, this is, if you believe in a project, this is the time. This is the best I can use an analogy for, is back in July when Ethereum and Bitcoin were crashing like crazy, or when stocks were crashing like crazy in March of 2020. I mean, this is the time to buy when everyone else is fearful. And so just take a quick overview. If we go into the 4 hour and we go look at the local all-time high, so if we remove this and we use 35 cents as our all-time high, and we keep the same all-time low, we're still in the red range. And for the 4 hour, yes, we are slightly overbought, and we were slightly rejected up here, but we are making higher and higher lows, which is something to keep a lookout. And I'll just reiterate what that looks like. See this right here? This is a higher low, even though the stock price, I mean, yes, it did make a new lower low, but as you can see here, these touched right here. See how this was higher, but this was lower, and these were almost the same closing price? That signals that this was pretty prolonged and that this was almost over. And so what that pretty much equates to is this nice little rise that you saw from 11 cents to 13 cents. And, you know, these small little things can be really key for trading day to day. What I like to do is I like to go on the weekly range, and when you go on the weekly range and you zoom out a little bit, it gives you a better perspective of what's going on, and it kind of like weeds out the noise. And as you see here, we've made 3 new lower lows on the weekly charts, which is extremely bullish. Now, if this were Bitcoin, people were saying they would be saying that they've closed above the bull market support band, which I think is pretty adequate to say. We had some buy zones triggered out ourselves here at 10 cents and 10.9 cents and 10.1 cents. Both of those were triggered, and because those were triggered, if you were to go map from when they were triggered to the all-time high, it was been up about 50%. So if you were part of our paid group, you would have seen that alert in a timely fashion and been able to capitalize on that. But another thing I want our viewers to take a look at is in the RSI section down here for the indicators. And a nice way to read that is these divots obviously are kind of like dips, obviously, on the chart. It's the same thing. You'll have tops and you'll have supporting averages. This is a moving average, the yellow line. And so it's really key to take a look here. It got rejected off the moving average almost 3 times, 4 times. Now, if we break the moving average, that'll be a whole different game changer. On the 1 day, we are above it, obviously, but on the 1 day, it's not as much resistance. On the weekly, though, we have never been able to get above it, which is something that we should be able to do if we are to prolong our bull run. And so the one difference that I'm noticing between the previous local bottom on the 6th of December compared to the 14th of March is we made a higher low on April 11th compared to here when we were just going green candle, green candle, green candle. Here we went red candle, green candle, green candle, semi-green candle, right? You can kind of count it as the third, and then the red candle, but we might be here, right here, compared to where we were like around here, and where we had all this way to go down. So in basic terms, what I think is happening is I think we made a higher low, and that is being indicated on the charts. And as if you look at the indicators, you can see that we're making new higher lows every single time on the RSI. And this is key. This is what big whales look at. This is what institutional money looks at. And this is what average people can even look at. And so another indicator I like to use that almost works the same way as stock, as normal RSI, is stock RSI. And this is what I like to see as the future. This is like my paragram into the future. This is when I can tell something's moving at the top of its channel. And so the one problem here with Hex, though, is Hex is starting to reach the upper parts of this band. And as we saw in this recent little bull run up to 16.6, we got rejected as soon as we were up here. In February, when we were up here, we got rejected. When we were up here in December, we got rejected. So it may not be the best, but if you go look here on the weekly, we are not that high up. We are at January levels, which we don't reflect in price. You know, the lowest February was 19.6. Right now we're at 12.8, so we still have a pretty ways to go. But personally, I think that we're gonna make a higher low. But you know, it's something to take a look at on these ranges. They're pretty key. And this is signaling that a top may soon be in order. But if you look at the other RSI, we're not nearly as high there. So that tells a different story. Now, you can also use this, which is called MACD, which is also kind of works in the same way. Actually, this is the wrong one. Oh, no. Let's find the correct one. MACD. Man, this is annoying. This is not the right one. I apologize, folks. This is pretty difficult. I can find it. We just need MACD. Alright, this doesn't simplify, but the MACD is pretty red right now, but not nearly as red as it used to be. It was massive over here. I think we may have been. This is shorter. This is way shorter. So our dips is getting way shorter now, and so that means that our highs are going to get longer. Personally, I think, even though this high was obviously very prolonged, but you can look at the entire history. If you go back here, we've never had such a big dip before. And so I think when PulseChain comes out, I mean, it's going to really take the charts into a whole different realm. And that's the one problem with charting, is it doesn't take into certain account for certain variables. Like if you were to chart on the S&P 500, you wouldn't be able to see that the Ukrainian war was going to make S&P tank. Like that was not foreseen. That was impossible.